Hey there. If you've been looking to boost your credit score fast, you're in the right place. Whether you're trying to get a better loan rate or just improve your financial health, your credit score plays a huge role in it all. But don't worry, there are some quick and easy steps you can take to get that score climbing. Let's dive into some simple, effective ways you can start increasing your credit score right now. Pay your bills on time. This one's a no-brainer, but you'd be surprised how many people let this slip. Paying your bills on time is one of the quickest and easiest ways to boost your credit score. Why? Because payment history makes up about 35% of your credit score, so missing even one payment can really hurt you. Think about it. If you miss a payment on your credit card or loan, that late payment gets reported to the credit bureaus, and it stays on your report for up to 7 years. The longer you go without paying, the worse it looks. On the flip side, making consistent on-time payments shows that you're responsible and trustworthy with money, which can really help increase your score. Let's say you have a credit card bill due on the 15th. If you forget to pay it on time, that could cause your score to drop by a significant amount, even if you pay it the next day. On the other hand, if you always pay on time, you'll build a solid history, and your score will reflect that positive behavior. If you don't pay on time, it could lead to late fees, higher interest rates, and of course, a hit to your credit score. For example, imagine you miss a payment on a $1,000 credit card balance. Not only might you face a $35 late fee, but your score could drop by 50 points or more, depending on how late the payment is. If you keep this up, it'll make it harder to get approved for things like car loans or even a mortgage. So make sure to set up reminders or even automatic payments to avoid missing any bills. Trust me, your credit score and your wallet will thank you later. Review your credit reports. Now, here's the thing. You might think your credit score is just a number that magically appears, but it's actually based on what's on your credit report. So reviewing your credit reports regularly is a crucial step in improving your score. A lot of times, mistakes or outdated information can end up on there, and that can drag your score down without you even knowing it. Your credit report is like your financial report card, and it includes all your credit accounts, credit cards, loans, etc., as well as any late payments, bankruptcies, or other financial activities. You're allowed to check your credit report for free once a year from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion. It's smart to do this and make sure everything's accurate. Let's say you find a late payment listed on your report that you know you made on time. If that's the case, you can dispute the error with the credit bureau and get it fixed. Once that incorrect info is removed, your score can bounce back. If you don't review your credit report, you risk letting errors slide under the radar. Maybe there's a missed payment listed that you already paid, or maybe someone opened an account in your name without your permission, identity theft. These errors can lower your score and, if left uncorrected, may cause you to miss out on great financial opportunities. So it's important to stay on top of your reports and keep things accurate. Take 10 minutes, grab your reports, and make sure everything looks good. It's an easy win for your credit score. Limit requests for new credit. Every time you apply for new credit, whether it's a credit card, loan, or store financing, there's a hard inquiry on your credit report. While a single inquiry might not be a big deal, too many in a short period can hurt your credit score. It tells lenders that you might be in financial trouble or trying to take on more debt than you can handle. When you apply for credit, the lender checks your credit history to assess whether you're a good risk. A hard inquiry stays on your report for about 2 years, but it can negatively impact your score for several months. So the more inquiries you have, the more it can lower your score, even if you're not actually using all that credit. Let's say you apply for 3 different credit cards in a month. Each one results in a hard inquiry. It's kind of like showing potential lenders that you're scrambling for cash. This can lead to a slight drop in your score. On the other hand, if you wait a bit longer between applications, you'll minimize the impact. A great way to limit new credit requests is to only apply for what you absolutely need. If you're constantly applying for new credit, your credit score could drop more than you expect. Plus, if your score drops enough, lenders might be hesitant to approve your next application, especially for big-ticket items like a car loan or mortgage. If you really need to apply for new credit, try spacing out your requests to avoid too many inquiries at once. Being selective about when and where you apply for new credit can help protect your score. It's all about being strategic. consider consolidating your debt. If you're juggling multiple credit card balances, loans, or other debts, consolidating them into one payment can make life a whole lot easier, and it could help improve your credit score too. When you consolidate debt, you combine all your smaller debts into a single, larger loan. This means fewer bills to keep track of and less stress over missed payments. Consolidation usually comes in two forms: a debt consolidation loan or a balance transfer credit card. With a loan, you pay off all your smaller debts, and then you only have to focus on repaying the loan. With a balance transfer, you move all your credit card debt to one card with a low or 0% interest rate for a limited time. Let's say you have 3 credit cards, each with a balance of $1,000. You're paying high interest on each one, and managing multiple payments is stressful. If you consolidate those 3 balances into a single loan or transfer them to a balance transfer card with a 0% APR, you can focus on paying down the debt without accumulating high interest. Over time, this can lower your credit utilization ratio, how much credit you're using versus your total available credit, which helps improve your credit score. If you don't consolidate, you might continue to struggle with high interest rates and late fees on multiple credit accounts. It can become easy to miss a payment, which will further damage your credit score. Plus, carrying high credit card balances, especially more than 30% of your credit limit, hurts your credit score because it increases your credit utilization ratio. The more credit you're using, the worse your score will be. Consolidating can help you reduce that number and manage your debt more effectively. Debt consolidation isn't for everyone, but if done right, it's a smart move to simplify your financial life and get your credit score back on track. Become an authorized user. One easy way to boost your credit score quickly is by becoming an authorized user on someone else's credit card account. This doesn't mean you're responsible for the payments, but you get to piggyback off of their positive credit history, which can help improve your score. When you're added as an authorized user, the credit card account's history, including its payment record, credit limit, and balance, gets added to your credit report. If the account holder has a strong positive history, that could give your credit score a nice little bump. Let's say your friend or family member has had a credit card for years, and they've always made their payments on time with a low balance. If you get added as an authorized user, their good habits will be reflected on your credit report, potentially improving your score. If you don't consider becoming an authorized user, you might miss out on a simple way to improve your score, especially if you don't have much of a credit history or need a quick boost. However, it's important to note that this strategy only works if the primary cardholder has a good payment history. Otherwise, you could end up with negative marks on your report instead. So before asking someone to add you as an authorized user, make sure they've got their finances in order. And there you have it. Those are some simple yet effective ways to boost your credit score fast. Whether you're paying bills on time, disputing inaccuracies, or becoming an authorized user, every little step counts toward building a stronger financial future. Remember, improving your credit takes time, but by sticking to these tips, you'll be on the right path. If you found this video helpful, don't forget to hit that subscribe button. It helps out the channel and ensures you never miss more tips and tricks on how to manage your finances like a pro. Got any questions or need advice on other topics? Drop them in the comments below. I'd love to hear from you. Thanks for watching, and I'll see you in the next one.